thing to take away is Social Security tax, Medicare tax. How are these four calculated? Net pay equals to... Hello friends, today I want to talk about paycheck stubs. Here is why your take-home pay is less than what your employer promised you. There are many deductions that take place to your gross income. Two of these deductions are federal government taxes and state government taxes. What are the other deductions, you ask? Well, keep on watching. Here is how to read your paycheck stub and figure out where does your money go. Disclaimer, this video is targeted for USA paychecks. Let's dive right in.
This is what it is, okay? Be water, my friend.
Hi there, Kind Juju Base here. I've been working as an engineer in corporate America for a couple years now. I like to create educational content to help early career folks and students with settling into the working world by sharing my experiences. If I just distract you, consider subscribing to my channel for more nuggets like this one. Thanks. Okay, back to the topic at hand. Let's start by breaking down the common items you will see in your pay stub. Starting with the most basic of basics, you should see your company's information and your information detailing which pay period this pay stub is for. Next, we have the current totals of this pay stub. This includes things like gross pay, before tax deductions, taxes, after tax deductions, and your net pay, i.e. your take-home pay. The numbers here will make sense in a bit, so bear with me. But for now, the thing to take away is net pay equals to gross income minus before tax deduction, minus taxes, and minus after tax deductions. Moving on, let's talk about the types of taxes that are imposed upon you. First, we have the federal government tax. Next, we have the state government tax. If you live in one of the following highlighted states, lucky you don't have state income tax. Social Security tax. Next, Medicare. Some more notable mentions are that, depending on which state you live in, there may be miscellaneous tax specific to that state. Okay? How are these taxes calculated? Good question. Hang in there. I'll talk about them later. Now that we know the type of taxes that will be imposed upon you, let's talk about before tax deductions. These can include things like your 401k deductions. If you contribute to a pre-tax 401k or a traditional 401k, your deduction will show up here. If you're unsure about the 401k in general or just want to know more information about the differences between the traditional or raw 401k, please check out my video on the 401k where I explain it in more details. A link in the top right corner or description box down below. Next, if you have HSA contributions, the deductions will show up here as well. More information about the HSA in my previous video. Links in the top right corner and down below in the description box. Alright, that's all there is to before tax deductions. What about after tax deductions? If you contributed to a raw 401k, this is considered as an after tax deduction, so it will show up here. If you participated in your company's ESPP program, your deductions will show up here as well. More information about the ESPP in my previous video. Links again in the top right corner, down in the description box below. Okay, moving on. You should also see a section called Employer Paid. If your company pays for your insurance, these things should show up here. This can include things like life insurance and disability insurance. Moving on, now that we have talked about before tax deductions, after tax deductions, and what your employer has paid for your insurance, let's move on to talk about how your taxable wages are calculated. Remember from the earlier section, we have 4 different kinds of taxes: federal tax, state tax, social security tax, and your Medicare tax. How are these 4 calculated? Alright, let's take a look. For the federal level taxable wage, it is calculated as such: gross income minus pre-tax deductions plus basic life insurance plus disability insurance. So with the numbers shown in this example here, the number computes to $1,768. For the state level, it is the same as the federal level. What about Social Security? This is computed differently from the federal and state level taxable wages. It is calculated as such: gross income minus HSA plus basic life insurance plus disability insurance. notice that the pre-tax 401k deductions does not apply here. So this makes our Social Security taxable wages compute to $1,868. And lastly, Medicare. The taxable wage for Medicare is calculated the same way as the Social Security taxable wage. Okay, cool. Now that we have broken down all these different items, let's bring in all these things together and look at how your net pay is computed. Assuming these are the tax rates for the 4 different taxes, here's how your taxes end up resulting to. Next, let's bring in your before and after tax deductions. And now let's look at your current totals with you again. Your before tax deduction is computed to $250. Taxes adds up to $531.86. After tax deductions adds up to $300. So taking all of these into consideration, your take-home pay is $918.54. Okay? So hopefully now you see why your take-home pay is less than what your employer promised you. It is not that they are taking money away from you. Hopefully you were able to learn about the types of deductions that takes place and how your taxes are actually computed. Hey, if this video was helpful to you, consider giving me a like, subscribe, or drop a comment if you have any questions, and share this with a friend who you think may benefit from this knowledge as well. Thanks for tuning in. I appreciate your time, and I'll see you in the next one. Bye bye.